Hello everyone. So the stock market is trading in a very wide range today. And as we approach the close, it looks like we're up a little bit over 300 points on the Dow as of right now as of the recording of this video. But there's been so much volatility in the market, and why is it trading in such a wide range? We're going to talk about that coming up next. Hello everyone, my name is Paul Zephyr, and I'm the Chief Investment Officer of Warwick Shore Advisors. We are a wealth management and investment management firm located in Orlando, Florida, with clients across the United States. If this is your first time coming to our channel, I ask that you please hit the subscribe button. Please like and share this video to help us spread and increase the financial literacy of our globe. All right, so we're going to jump right into it today before the market closes now. This video is recorded before market close, so some of this information may be a little bit dated as it closes, but more than likely we're going to close up higher today than we did yesterday. And there's a few reasons why we're doing so. So after initially opening down over 450 points, the Dow rose as high as 300 points right now. Is up about 200 points and change in the middle of the trading session. And this was before it pulled back from its highs in the middle of the day, and then it looks like there's some buying support going into the market at the close. In a reversal in the recent past that we saw, the financial and energy sectors led the market higher today. This was led by large banks, which regained much of the losses from yesterday. Oil prices climbed higher, closing at a little bit over $27.30 a price of a barrel, which drove the price and performance of the energy sector as a whole for the economy. Now, this comes just 1 week after we saw a record low reading of oil and gas rigs in the United States. And even with this midday surge and this surge at the end of the day, and as the markets are closing now, the major indices are still negative for this week. The unemployment data released today shows just under 3 million additional Americans filed for unemployment insurance last week. This number was worse than expected by a little over 200,000, and it brings the new claims during this coronavirus-induced downturn to over 36 million people. That is a staggering number of unemployed Americans in this country. This is the largest amount of job losses that has been seen in the U.S. history. As of now, the official unemployment rate is at 14.7%, but however, we all know that that number is expected to increase, and it more than likely will increase when we see the reading for May and early June. The reversal in stock prices today was led by the notion of more economic stimulus being made available to the U.S. economy, more free money. Round 4 potentially is what we're going to be looking at next. So what will all this liquidity do for the markets in the long run? In the short run, we have seen inflation slowly creep into the economy and food prices and in grocery products as they are starting to increase a little bit based on increased demand, and also based on the fact that many farmers had to throw out a lot of the supply that they had that was oversupply, which increased the prices. It is very possible that as we move forward in this investment landscape, that we will see a level of strength in the energy and utility sectors as inflation swells in this economy. I'm very curious to see what all of your thoughts are and how everyone feels about investing going forward in this near-term future in the next 15 to 30 days or so. Do you think that we're going to see more inflation? Do you think that if we see more inflation, how rapidly will it be in our economy? And will that inflation play out in the stock market? Which is very possible that it can play out in the stock market because the Federal Reserve has essentially put a stock market put on the market with the buying of corporate bond ETFs. Or do you think that it's going to play out more so in the energy sector of the market and drive gas prices up? We know that right now gas prices are very low, not only in the U.S., but all across the globe. They're lower than what they have been historically over this last 10 years, last decade or so that we've seen. With that being the case, lower gas prices act as a de facto tax break or a de facto stimulus to all the citizens of this globe, effectively allowing us to be able to spend more money on discretionary items as opposed to the consumer staples items. But if gas prices continue to rise, and if oil prices continue to rise as they have this week, gas prices will ensue and rise as well following that. As gas prices rise, that will have a reverse effect, should say, as it has when gas prices go down. That will cause a de facto tax on all the citizens of this country, effectively reducing the amount of money that everyone has for discretionary spending. So if we have a rise in inflation, a rise in energy prices, a rise in gas prices, in a situation where we have significantly high unemployment at a place in our economy where more than likely majority of those unemployed, are a large portion, maybe anywhere from 40 to 60% of those that are unemployed now will be permanently unemployed when the economy fully turns around. In that situation, how do we invest? How do we move forward? What sectors of the economy are best and primed to survive during then? I know value has been beat up horribly by growth over the last 7, 8, 10 years and change, but it is very possible now that the value play may come into play. And it's very, very possible that those sectors that have lost out over the recent past may start to win and start to move forward. I want to see your comments below. I'm interested in seeing what your thoughts are and how you're playing this volatility that we're seeing right now in this emotional market. And as always, if you are interested in a free financial planning cheat sheet, please leave a comment below and send a message to the email address in the description of this video, and I'll send that over to you. I also sent out an investment letter to all of my clients last week, advising them of how the market is behaving and giving them some background on investing in a market that behaves like this. And if you would like a copy of that, I'll send that over to you as well. Just go ahead and leave a comment below, state your interest for it, and shoot me an email and I'll send that over. And lastly, before you leave this channel, I ask that you please hit the subscribe button. Please like this video. Please share this video. Help me increase the financial literacy of our globe. Thank you so much. Have a great day.